as an asset that is going to protect my long-term wealth. And that sounds crazy when it goes up and down like it does, right? And you've just gone through that full first cycle and you're like, oh. But what you'll find is the low is higher than the last time it hit the bottom. And then the next low will be higher and each high is higher. Oh, it's in an uptrend. So I just don't need to sweat about the ups and downs. What I should do is just accumulate every time it's in a down cycle. Why? Well, because the down cycle is signifying that economic contraction is happening and that the world is slowing down and money's being taken out of the system, quantitative tightening, which is the opposite process, and assets fall. And interest rates are going up, so your disposable income's going down because your wages aren't going up enough and the interest rates have gone up more. So it's at that point, you know the outcome is if economic activity is going to slow down, the next year, in a year's time, they're going to be printing money or cutting rates because it's very cyclical for the phenomena of this rolling of this debt. So therefore, you should be buying more at these points because then you've got the next upside cycle to come, which is what I've always said is it's the cyclical trend within a secular trend. So secular trend is something long-term trend driven by a large explainable factor. Bitcoin is an answer to the financial system, and over time the number of users and people who become aware of its superpower, the more people move across. That is a secular trend of adoption. That's really important. The cyclical trend, the cyclicality, is the ebb and flow within it. So that's the boom bust of the economy. Not at a gigantic bust level, it's just a boom bust. Now, Bitcoin halving cycles correspond with all of this. Why? Is there some magic in that reduction of supply? Maybe. But Bitcoin came out exactly at the same time that all interest rates went to zero. They're all part of the same cycle. So every time we get into this economic cycle, it affects Bitcoin in the same way. But over the long run, the adoption, the secular cycle, means it outperforms everything. Because there's no secular adoption of the S&P 500. There's no secular adoption of General Electric, or that stuff's not really happening. Yes, there's an ongoing purchasing by 401ks, but that's really it. So that big mega trend is the observable trend that people can participate in, and it is going to more than offset what is going on with the debasement of currency. And that's to do with Metcalfe's law and the exponential trend of the adoption of a technological network or a technology itself. Great. So that's why Bitcoin charts over time just keep doing this. It's because it's exponential. The S&P 500 doesn't do that because it's not exponential. But the NASDAQ does. Most technologies do. And the reason why the NASDAQ keeps outperforming the S&P and keeps outperforming value stocks and makes people so angry is because it's all about the adoption of new technology. If you think about what's been driving the NASDAQ recently, it's the adoption of AI. Obviously, that's the fastest adoption of any technology in history. Crypto was the fastest beforehand, but this has eclipsed it. It's gone from, in 6 months, from basically 0 users to 100 million users in 6 months. We've never seen anything like it. But Metcalfe's law is the number of nodes on a network, i.e. number of users of crypto, versus the number of applications in the interconnection. So the more we build out a Web3 world, the more that's the multiplier as opposed to the people. Initially, it's the people who use it. So like Doge has no use case apart from memes, memetics, but it has a bunch of users. Bitcoin has limited use, but a huge amount of users as well. But the use case is very clear, which is the scarcity of the asset and the purity of the asset and the security of the network. Ethereum has lots of uses, DeFi, NFTs, all of this stuff, and a whole load of users. So this is what's driving these things. Why are we adopting the technology? That's the productivity equation. The financial system becomes more productive and safer and securer by using cryptocurrency rails. We become superpowers as humans by adopting AI, robotics. We become more productive and ability to do stuff by adopting EV technology. All of this stuff is actually driving productivity. There are use cases. So let's just get out of the NFT noise and everything else. I'm having dinner with a friend of mine. He used to run the trading operations of one of the largest banks in Australia. It's a big bank, the equivalent of Bank of America. And he's like, he's just retired. And he's like, I've been heavily involved in crypto at the bank, doing stuff. I'm like, what are you guys doing? He goes, we've issued 5 stable coins. I'm like, why? Why do you need the stable coins? Why not use Tether or USDC or whatever? He's like, okay, so this is what people don't understand, why crypto is so important for the financial system. He said, we're in Australia, we have a gigantic pension system. Our pension system buys a gigantic amount of US equities. The US is about to go to settlement, so when you buy a share and you have to pay for it from T+2 or T+3, so that's trade date plus 3 days to pay for the bill, to T+1. Okay, that seems fine. Foreign exchange transactions are T+2. They can't settle the US stocks that they buy. So they either have to leave massive amounts of money with a broker that they dealt with who could go bust or uses the money ineffectively, or they create a stable coin for instant settlement. So and they've built that. This one is on top of Ethereum. Okay, fine. But that is a multi-$100 billion use case for why crypto is very powerful for increasing productivity within the financial system alone. And there's many of these all over the place. So why is Tether such a big, useful stablecoin? You've basically fractionalized the US dollar and allowed a person in the Philippines who works in a rice field to receive a payment from his cousin who's living in New York City, instantaneously without any cost, in dollars, which is the currency that they all want. That's mind-blowing. That's why the stablecoin system alone is so gigantic. So I don't agree with there is no productivity or killer app. The killer app of crypto so far has actually been stablecoin. That's not right. Every mobile phone network is priced in Metcalfe's law. All networks are priced at Metcalfe's law. But
why can't they be?
I don't think it matters, Tom. I think you're getting caught in a thing that doesn't really matter. What matters to the bigger equation? There's 2 things that matter with this whole thing is, does Bitcoin protect you from this issue of debasement, the mutualization of losses amongst everybody? Yes. Okay, fine. Nothing else matters there. Could it form part of what I call the exponential age of technologies, which could eventually increase productivity? Yes. Now, they're not mutually exclusive. There's no, Metcalfe's law is just a measurement of the value of a network. But this productivity idea is the big one. And the productivity idea is, if we can't keep increasing the debt. Remember, the magic formula was population growth or productivity growth plus debt growth. We can't change the population. The debt growth's got too far, so we've got this one thing in the middle. It's the only thing that can change this entire equation. So what we can do is try and grow that. Okay, now let's step back and say, okay, what's happening to the world that's a really big change that happened that the central banks are looking like they're going to print money to do? And that's the green revolution. And it's being driven by Europe, but it's being driven elsewhere. So yes, climate change, yes, all of the benefits of doing this, but there is a magic outcome. So productivity, let's say we use AI, we can do more stuff. And you and I have talked about this in the past, right? We can expand now human knowledge in ways we couldn't do before. And factory lines and agricultural machinery just basically created more productivity per human. Okay, fine. But the big equation in this is the inflation adjusted price of oil, which let's call that the kind of best benchmark for energy input costs, have been $40 in inflation adjusted terms for 70 years, 60 years. So we've got a fixed thing here, which is, can we put more output per calorie or kilojoule of energy? That is what productivity is all about. So technology keeps rising, and that's great, keeps going. But all of these governments are focused on the other part of this equation, which is, can I lower the cost of energy? Because if you drop the cost of energy from $40 per barrel of oil equivalent to 10, you 4x productivity. And there is your solution. And that is why they're pouring trillions of dollars into this. And we're seeing what's known as Wright's law, sorry, all these terms, which is the increase in output of a new technology has a commensurate and measurable decrease in the cost. And we're seeing that with all of the green energy. So it's just getting cheaper and cheaper and cheaper and cheaper. Now, we can't scale it enough yet, but we know that there's nuclear, there's going to be part of this equation. There's a bunch of things, but over time, we will move away from that $40 fossil fuel anchor and move to $10. So think of the multiplier, because technology is doing this and the cost is doing that. That is what the productivity miracle that is coming.